Well, by far the best investment you can make is in yourself. For example, communication skills. I tell the students that come that they're going to graduate schools and business, and they're learning all these complicated formulas and all that. If they just learn to communicate better, and both in writing and in person, they increase their value at least 50%.
Are you curious about Warren Buffett's secrets for growing $1,000 in 2023? Look no further. As one of the most successful investors in history, Buffett has invaluable tips to share. Get ready to unlock the path to financial growth and set yourself up for success. Warren Buffett is a legendary investor who has made billions of dollars through his investment firm, Berkshire Hathaway. His success lies in a long-term approach, targeting undervalued companies with solid business models. In a recent interview, he graciously imparted some invaluable advice on growing $1,000 in 2023. Let's embark on a fascinating journey to uncover Buffett's wisdom and discover how we can apply it to our investments. Here are his top tips. Invest in yourself. Investing in yourself is the foundation of Warren Buffett's wealth-building philosophy. It's all about recognizing that you are your most valuable asset. So what does it mean to invest in yourself? It's about dedicating time and resources to enhance your knowledge, skills, and connections. Education plays a pivotal role in this process. Continuously seek opportunities to expand your knowledge and gain new insights. It can be through formal education, online courses, books, or even mentorship programs. The more you learn, the better equipped you are to navigate the financial world's complexities. Equally important is developing your skills. Identify areas where you excel or have a genuine interest, and then invest time and effort to hone those skills. Whether it's financial analysis, negotiation, or strategic thinking, mastering these skills can open doors to lucrative opportunities. Building a strong network is another essential aspect of investing in yourself. Surround yourself with like-minded individuals who share your goals and values. Attend conferences, join professional groups, or connect with industry experts. Networking provides valuable insights, mentorship, and potential partnerships that can amplify your success. Remember, investing in yourself is a continuous process. As you grow and evolve, so should your investments in self-improvement. By dedicating time and resources to enhance your education, skills, and network, you position yourself for greater financial opportunities and long-term success. Now that we understand the importance of investing in ourselves, let's move on to Warren Buffett's next strategy. Start small. Now let's talk about the importance of starting small when it comes to investing. Warren Buffett advises us not to rush into investing large sums of money immediately. Instead, he suggests beginning with a modest amount, like $1,000, and learning from the experience as we progress. By starting small, we give ourselves room to grow and make mistakes without risking too much. This approach allows us to become familiar with the intricacies of the market and the specific investments we choose. It's like dipping our toes in the water before diving in. Starting with $1,000 might not seem significant, but it can be a valuable learning opportunity. As we gain experience and confidence, we can gradually increase our investment amount. Remember, Rome wasn't built in a day, and successful investing takes time and patience. Warren Buffett's advice reminds us to be realistic and pragmatic. Starting small allows us to navigate the market at a pace that suits our understanding and comfort level. So embrace the power of a modest beginning and let your investments grow steadily over time. Now that we understand the importance of starting small, let's move on to another crucial principle. Invest in index funds. In Warren Buffett's world of investing, one of his go-to strategies is putting money into index funds. Now, you might be wondering, what exactly are index funds? Think of them as your ticket to the stock market without the stress of picking individual stocks. Index funds, in a nutshell, are investment funds that allow a specific market index like the S&P 500. They offer a brilliant advantage: diversification. Investing in an index fund means spreading your money across a broad range of companies, reducing the risk associated with individual stock picks. It's like having a little piece of many different pies rather than putting all your eggs in one basket. But that's not all. Index funds also come with another enticing benefit: low fees. Compared to actively managed funds, which charge hefty fees for the expertise of fund managers, index funds operate on a set-it-and-forget-it philosophy. This means lower expenses for you as an investor, allowing your money to work harder and potentially grow faster. Warren Buffett has long advocated index funds because they align with his belief in long-term investing. He encourages investors to be patient and resist the temptation to buy and sell stocks based on short-term market fluctuations. Index funds provide stability and steady growth to help your investment thrive over time. So why does Warren Buffett favor index funds? It's all about simplicity and effectiveness. Instead of getting caught up in the complexities of stock analysis and trying to predict the future, he chooses a straightforward approach by investing in index funds. This way, he can focus on what he understands and reap the rewards of long-term market growth. Invest for the long term. In order to truly grow your $1,000 in 2023, it's crucial to adopt Warren Buffett's mindset of investing for the long term. Yes, the stock market can be a wild roller coaster ride in the short term, with prices soaring and plummeting unpredictably. But if we take a step back and look at the bigger picture, we'll see that historically, the stock market has shown an upward trend over the long term. Think of it as a journey where you invest in companies you understand and believe in, and then patiently wait for your investment to blossom. Warren Buffett himself has emphasized the importance of thinking like a business owner rather than a stock trader. By focusing on the underlying value and potential of the companies you invest in, you can stay grounded amidst the market's short-term turbulence. This long-term approach offers you the opportunity to ride out the market's ups and downs, letting your investments benefit from the economy's overall growth. So instead of obsessing over daily price fluctuations, keep your eyes fixed on the horizon and embrace the power of time in your investment journey. Now, let's move on to the last principle: be patient. Warren Buffett teaches us that investing is a long-term game. It's not about getting rich overnight. It's about patience and allowing your investments to grow steadily over time. Imagine planting a seed in a garden. You don't expect it to become a towering tree within a day. It takes time for it to sprout, grow roots, and eventually reach its full potential. Similarly, investing requires patience. By allowing your investments to mature over time, you give them the opportunity to compound and generate substantial returns. So don't expect instant riches. Instead, embrace the idea that wealth accumulation requires patience. Like a marathon, investing success comes from staying focused, persevering through challenges, and allowing your investments to grow steadily. Remember, the journey counts, and with time on your side, you can achieve your financial goals. Remember to start small, invest long-term, and be patient. With a little effort, you can reach your financial goals. Warren Buffett's investment strategy is all about investing in companies that he truly comprehends and which possesses a lasting competitive edge. In other words, he looks for businesses that have something unique, making it challenging for competitors to match their success. Take, for instance, companies with strong brands or those that dominate a specific market without any significant competition. By investing in such companies, Buffett believes in the power of familiarity and the potential for long-term growth. So the key takeaway is to seek out companies you understand well and have a clear advantage in their respective industries. It's about investing in what you know and believe in. When it comes to growing your first $1,000 in 2023, one of Warren Buffett's fundamental principles is investing in companies you understand. This means choosing businesses whose products, services, and overall operations you can easily comprehend. By doing so, you're more likely to make informed investment decisions. Why is this important? Well, think about it this way. If you're familiar with a company's industry, you can better assess its potential for long-term success. Understanding a business allows you to gauge its competitive advantage, what sets it apart from others in the market. This advantage could be anything from superior technology to a strong brand or a unique business model. Investing in companies with sustainable competitive advantages increases your chances of seeing your $1,000 grow over time. So, focus on industries and businesses that you can grasp and confidently evaluate. This way, you'll be better positioned to make sound investment choices and set yourself up for potential financial growth in 2023. As we conclude this journey through Warren Buffett's wisdom, remember to invest in what you understand. By focusing on companies with a sustainable competitive advantage, you can nurture your $1,000 investment and set yourself up for success. If you found this video helpful, don't forget to like, share, and subscribe for more valuable insights.